Tesla's stock is up this morning, continuing its recovery from earlier this week when its second quarter deliveries above analyst expectations. The last 5 days have seen a 20% increase in shares. From someone posing as a robot dancing in a suit to a quite haphazard robot, to a robot that is genuinely performing practical jobs in the workplace today, oh yeah, we've come a long way with Optimus. Furthermore, it is clear that Tesla is much more than just an automaker. At Tesla, we work with software a lot. In fact, a significant portion of our engineering work is software engineering. Therefore, I would argue that Tesla is just as much a software firm as it is a hardware company. This is significant since, well, automobile manufacturers aren't typically software firms. The Megapacks, Powerwalls, solar, energy storage, all of the software that controls the cars are auto software and, of course, AI and fully autonomous driving. You're using a wise viewpoint if you've only been considering Tesla's automobile manufacturing. But it's time to broaden the scope. We explore Tesla's enormous potential beyond cars in this part. Expert Keith Fitzgerald, who keeps a close watch on market developments, offers insights that could alter your perspective on Tesla. Fitzgerald thinks that Tesla's potential is still in its infancy. In the upcoming years, he expects the company to double or possibly quadruple in value, indicating considerable growth. This expansion is supported not just by their well-known autonomous cars, but also by fully autonomous technology and energy solutions, which are still extensively unexplored by Tesla. However, before we go into the specifics, please remember to subscribe to Tesla Stock News and like this video. Let's take a closer look now. 95% of experts who previously undervalued Tesla now consider it to be a huge misunderstanding to regard the firm as just an automaker. Fitzgerald highlights Tesla's revolutionary potential in fields like artificial intelligence and robotics, arguing that it may be among the most cheap AI stocks available today. This opinion is supported by a comparison of the company's current market value with its potential for the future. As we proceed, please pay attention. There's no need to click or purchase anything. We're going to play a video in which Fitzgerald expresses his optimism in Tesla, implying that the company's stock price may reach $300 in the upcoming year. Keith, you're still optimistic about Tesla, I should add. Next year, this stock might be worth $300. I am, indeed. In the upcoming years, I believe this stock will double, triple, or possibly even increase in value. We're still in the early innings too. Anyone considering this solely in terms of automobiles is highly intelligent, but I would advise them to greatly expand their horizons. This has to do with robotics and power. It might be the greatest underappreciated AI play available right now, in my opinion. And Musk knows what he's doing, whether you like him or not. A slight 20% rise above its current position. His wider perspective, however, is the true lesson. The stock has enormous unrealized potential that might cause it to double or triple in the near future. It is not just about a 20% increase. What makes this important? Because it changes the perception of Tesla from a conventional automaker to a pioneer in robotics and artificial intelligence. Tesla may now have the best investment opportunity in AI as a result of this. Whether you like him or not, Elon Musk's leadership is making Tesla a dominant force in both the automotive and overall industries. This is about more than simply automobiles. It's about power, automation, and leveraging one of the market's most underappreciated industries. Watch as we examine why Tesla may be the underdog in the AI race, poised to transform not only transportation, but also our daily interactions with technology. Any investor might become uneasy given the startling 45% increase in Tesla's shares in the last 30 days. But when in doubt, zoom out, as the saying goes. Tesla's stock is still down 6% from a year ago. We've really just gone back to where we were a year ago. The market has really corrected, dispelling the concerns and negativity that previously hampered Tesla's prospects. Let's talk about the details now. Numerous market analysts expressed doubt about Tesla's delivery figures, forecasting a decline because of a purported demand issue. The delivery numbers, however, contradicted the bad narrative and exceeded expectations. Furthermore, the excitement around the August 8th robotaxi day is expected to dispel additional doubts, boosting optimism. Crucial is Elon Musk's approved compensation plan, which gives him a 25% stake in Tesla. This is not just about the numbers. It's also about securing Musk's dedication to Tesla and freeing him from the distraction of outside endeavors to lead cutting-edge AI initiatives. This decision supported Musk's long-term goals for Tesla and coincided with the settlement of associated court concerns, which contributed significantly to the recent price spike. Going forward, the facts contradict the complaints leveled at Tesla for lowering car costs, which some saw as an indication of declining demand. This approach is probably in line with volume sales and wider market penetration, which is a wise move in the very competitive auto industry. Keep checking back as we prepare for Robotaxi Day. The possibilities for advancement in robotics and artificial intelligence are still enormous, and Tesla's journey is far from complete. Don't pass up these advancements. Continue to observe, keep yourself updated, and think about how Tesla's tactics may affect the global automotive and technological landscapes more broadly. Tesla has distinguished itself with its strategic price choices in the face of high borrowing rates that are affecting consumer spending and automakers that are having difficulty selling cars. Tesla's best-in-industry margins allowed it to lower pricing, unlike Ford and GM. This has positioned Tesla as a leader in market strategy and operational efficiency, in addition to helping to sustain sales volume. Critics can contend that Elon Musk's decision-making has shifted or that his participation with Tesla has diminished. On the other hand, recent rulings seem to indicate differently. These are the choices made by a leader who is still very aware of the demands of the business and the state of the market. Although individuals involved in trading should exercise prudence, the picture for long-term Tesla stockholders is still favorable. Expectations are extremely high as excitement builds for August 8th, which is predicted to be a momentous date for the introduction of Tesla's robotaxi. This could be a risky period for short-term investors and swing traders. The stock may see a sell-off, the traditional buy the rumor, sell the news situation, if the event doesn't produce anything noteworthy. Therefore, use caution and prudent investment management around this day. Many professionals, on the other hand, take a long-term approach to investing, regularly using dollar-cost averaging without attempting to time the market. It's a more reliable strategy because trying to get rich fast by timing the market is frequently the fastest way to lose money. To be clear, 20% of my portfolio is invested in Tesla, which reflects my optimistic view of the business. In the long run, it is anticipated that the robotics, fully autonomous driving, and energy sectors would greatly surpass Tesla's current market capitalization, possibly adding an additional $3 trillion by the end of the decade. These fields, particularly robotics and FSD, represent unexplored markets with transformative potential. The revolutionary influence could be enormous, but it is difficult to determine the precise magnitude. With revenues and share prices soaring, Nvidia, for example, has demonstrated how profitable it can be to enter new tech sectors. Tesla and similar companies, which are positioned to follow a similar trajectory, have not yet experienced this level of growth, but are anticipated to do so as they open up these new markets. Based on anticipated future cash flows, a discounted cash flow model, a crucial tool in investment analysis, can be used to estimate a company's prospective financial trajectory. Applying a DCF model to Tesla, specifically on the specially created Stock MVP platform, indicates that over the next 5 years, revenue growth of roughly 40% to 50% is anticipated. It is predicted that this expansion would happen in a parabolic spike rather than gradually. This pattern is similar to the growth trajectory that was previously seen at Nvidia, where new technology and market adaptations led to a sharp acceleration after initial modest increases. Strategic developments in 3 key areas, robotics, fully autonomous driving, and energy solutions, are responsible for Tesla's phenomenal success. In addition to being a major extension of Tesla's business strategy, each of these industries also provides access to larger, quickly growing markets. While developments in FSD technology